Hi, I am Anand Radhakrishnan, and today I am here to talk about Franklin India Balance Advantage Fund. Franklin India Balance Advantage Fund is an open-ended dynamic asset allocation fund and a complete portfolio solution. It intends to generate long-term capital appreciation and income generation by investing in a dynamically managed portfolio of equity and fixed income and money market instruments. The asset allocation strategy backing Balance Advantage Fund has a long track record and has been successfully optimized for the inputs used and periodicity of asset rebalancing. The key difference between Franklin India Balance Advantage Fund and an aggressive hybrid fund is that Franklin India Balance Advantage Fund dynamically manages the equity component and can invest 0 to 100% in equity and debt respectively, while aggressive hybrid fund invests between 65 to 80% of total assets in equity and the rest in debt. In Franklin India Balance Advantage Fund, the gross equity exposure will be endeavored to be maintained between 65 and 100%. At any point, if the equity allocation as per the model falls below 65%, the gross equity exposure will be maintained using equity derivatives. The second difference is that in the case of Franklin India Balance Advantage Fund, the asset allocation is derived from Franklin Templeton's in-house proprietary dynamic asset allocation model. The final asset allocation between equity and debt will be arrived at the basis of combination of quantitative and qualitative factors. The quantitative parameter would be based on month-end weighted average price to earnings ratio and price to book ratio of Nifty 500 index. The qualitative overlay includes factors such as macroeconomic trends, policy backdrop, aggregate corporate fundamentals, market liquidity models, etc. Aggressive hybrid fund, on the other hand, does not use a model, and the asset allocation is based on the fund manager's view on the market. One of the primary risks that emanate in investors' portfolio is getting wrong asset allocation at wrong ends of the market. It is quite conceivable that investors end up having very conservative asset allocation when the markets are very attractive and very aggressive asset allocation when the markets are unattractive. I think one of the stellar things, value addition, which FIBAF does to the investor's portfolio is to help them take adequate risks when odds are in their favor and take less risks when odds are against. I think that is the single biggest value addition a balanced advantage fund does to the investor's portfolio. And second advantage or second risk mitigation it does is, even if you decide to invest in equity, you don't know what is the appropriate asset allocation that you should have. By giving a very useful model to handle it, it helps investors to optimize or marry the risk and the return of the market through a very dynamic asset allocation approach. I think getting the initial allocation right, as well as dynamically managing the asset allocation through the cycles of the market, through the highs and the lows, through the greed and the fear, through the euphoria and the abject fear, are some of the things which Balance Advantage Fund does it well, and that helps investors to optimize the risk return of that portfolio pretty well. Global equity markets have corrected in recent months and continue to be volatile amidst multiple headwinds of inflation, interest rate hikes, and then the ongoing geopolitical tensions. Indian markets have also been impacted, but have held up much better compared to major developed and emerging market counterparts. Such episodes of market volatility can push investors off course, leading them to take suboptimal decisions, mainly based on emotions. With that in mind, Franklin India Balance Advantage Fund will help to automatically allocate between equity and debt basis the market situation using a combination of a quantitative model and a qualitative overlay. This way, the asset allocation in balanced advantage fund will be agnostic to human emotions by increasing equity allocation when the valuations are cheaper or in a falling market, and decreasing equity allocation when the valuations are expensive or in a rising market. The asset allocation is derived from Franklin Templeton's in-house proprietary dynamic asset allocation model, an active stock selection with a flexi-cap bottom-up approach. We believe this will help improve outcomes for investors by enabling them to stay invested over longer periods without worrying about the underlying market situation. Our existing dynamic asset allocation fund follows a fund of fund structure which is eligible for debt fund taxation. While Franklin India Balanced Advantage Fund also follows a dynamic asset allocation framework, it is not a fund of fund. Balanced Advantage Fund is eligible for equity taxation if the allocation to equity asset class is above 65% for a year. As per asset allocation specified, the scheme can invest 0 to 100% in equity and debt respectively. Our endeavor will be to maintain the equity allocation in Franklin India Balanced Advantage Fund in the range of 65 to 100%. The second difference between fund of fund and balanced advantage fund is the fund of fund follows exclusively a quantitative model for asset allocation, whereas the balanced advantage fund will use a combination of quantitative model with a qualitative overlay to decide on the asset allocation. Calendar year 2022 has been a year of negative macroeconomic surprises globally. While inflation has overshot the target rates, growth has been underwhelming globally. And because of that, we have seen meaningful market corrections across the world, whether it is in US, Europe, or many parts of the emerging market, and India is no exception to that. Clearly, the policy makers are scrambling to rein in inflation without impairing growth. We think that in the next 3 to 6 months, some of the supply side pressures which led to high inflation, whether it is commodities, hard commodities, agri commodities, energy, should significantly cool off. Second is the positive base effect will start to kick in the measurement of inflation in the fourth quarter of the calendar year. The combination of these two should lead to many of the supply side related inflation measurement to become a lot more moderate in the next 2 quarters, and India is one of the markets where the supply side bottlenecks have created inflationary pressure. And this should lead to a more measured policy response to handling inflation. The second issue that has been hampering the market is the normalization of liquidity in the global financial system. Clearly, post-COVID, we saw most central banks adopt a very aggressive monetary loosening policy. We are seeing rollback of some of these policies with liquidity tightening across markets, and India is no exception to that. We have seen the surplus liquidity in the banking system slowly go off in the last few months, and I think markets are getting used to more normalized liquidity situation. And this has certain implications on both nearer term and longer term valuation. I think some of the excess liquidity led inflation in valuations is currently normalizing, and we still are probably have some more way to go in that process. Third, on the growth, we think India will tend to outperform many of the other emerging markets in terms of both economic growth and corporate performance, and that should augur well generally for the equity markets. So we remain constructive on equity as an asset class, and especially with domestic growth companies tending to do better than the companies that are exposed to global growth conditions. Thank you all for listening to me on this special episode on Franklin India Balanced Advantage Fund. If you have more queries on this fund or on the markets, please reach out to any of our FT representatives nearest to you. We'll be glad to get back to you with relevant answers. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.